So here's a question. Are turnkey rentals still good right now, or are they a thing of the past and you're just not going to see those work again? That's what we're going to talk about today. Hello, my fellow Ripplers. This is Chris Miles, your cash flow expert and anti-financial advisor. This show is for you, those that work so hard for your money, and you're now ready for your money to start working harder for you today. You want that freedom and cash flow right now, not 30 or 40 years from now, but you want it today so you can live that life as you love with those that you love. But most importantly, guys, I know it's not just about getting rich. Although we love that, it's about living a rich life because as you're blessed financially, you have a greater capacity to bless the lives of those around you. And that's exactly what we're here to talk about today for you guys. Appreciate you tuning in, allowing me to create a ripple effect through you. And guys, as a special shout out, we've had so many of you recently reaching out with questions, especially about, what is it you can actually do to create passive income? Well, answer to that is first step, go to moneyripples.com, try the passive income calculator to see what's possible in your situation right now. So try that out. All right, so I'm bringing on a repeat guest, although for some of you guys, if you've been joining us recently, you probably haven't seen it, but Jim Sheils, I've had him on a few times in the past. It's been a few years, and so I want to bring him back on because Jim is the owner of an actual turnkey real estate company that we talked about, like I mentioned on this as we're starting the show. He actually has a turnkey real estate company he's been working with for many years, had some changes and adjusted to where I think you guys might be impressed. You might be kind of surprised to see what's actually possible with this. So really excited to have him here on as well. He also has a program called 18 Summers. He's written a book about it. He's kind of like when we talk about the ripple effect and creating a legacy. That is something that Jim is all about. But definitely excited to have him on, especially with his Southern Impression homes and what he's doing with turnkey space. Really excited to have him here. So, hey, welcome back, Jim.
Hey, good to be here. Thanks for having me, Chris.
Yeah, man. So for those that don't know you, tell us a little bit about your background, which got you to be a real estate investor ultimately.
Yeah, I got into real estate investing over 25 years ago. I had wanted to do something on my own. I had had, some experience in corporate America, and it just wasn't for me. And I kept coming back to real estate investing. It made sense, the tangibility, the levers you could pull, and so I got into it slowly but surely, 25 years ago at that first house, 432 North M Street. And from there, it took me on a bit of a journey. It took me from foreclosures in California to coastal communities in Florida, survived the '08 meltdown and went very heavily into REOs. And then
Mm,
about 10 years ago, I went into two different things. I started working with families to try to help my own family, really, with 18 Summers, and I found new construction. And turnkey real estate, I'm sure we'll get into that today, has had lots of pros and cons to it, and we've
mhm.
all heard about that. But what we got into about 10 years ago kind of has become the 2.0, kind of the shift. And I know you and I have worked together personally on that. And that shift is, again, going from old fixer-uppers to new construction. And that's where I spend most of my time today, of course, with my own properties, but also building new construction properties for a large community of investors all over Florida.
What kind of areas do you focus on primarily?
We are, if we talk about Florida, we are not in Miami, we're not in Orlando, we're not in Tampa. We go to very second tier markets where the buy-in pricing is a lot more affordable, right? Because we want to go where there's population growth, economic growth, good affordability. That's an absolute key. Desirability and then healthy supply and demand. Are there areas in
Yeah.
Florida or wherever you are to do a good build to rent turnkey where they're, have an undersupply of housing due to people moving there? And so we go to those markets in Florida that are still experiencing growth, but have that more affordable aspect. So we're in about 12 different markets in Florida.
Well, and you're going to have people saying, of course, well, Florida had its, big heyday, especially 2021, 2020, 21, 22. Is the Florida market pretty much done? Is it tapped out? Is it going to start dropping? I'm sure you probably get those questions quite a bit, huh?
Oh, all the time, all the time. And it's great questions. And again, the real estate markets are very localized. That's what
Mhm.
I've learned. And again, I always look at medium value, Chris. So, when people hear about the prices have gotten too high, they
Mhm.
might be thinking about, where I sit here, Jacksonville, St. Augustine. Yeah, some of the upper end stuff has gone to an exorbitant level, and that's had a little bit of coming down. But the median value in Jacksonville is about 302,000. So 302,000, we've had, yeah, definitely some appreciation, but we were undervalued to begin with. And
Yeah.
so still around 300,000 for a medium priced home in a strong economy like Jacksonville is really good, opposed to, and again, I love these markets, but I look at the numbers, Miami, Orlando, Tampa, their medium price, Chris, would be almost twice the amount.
Mm.
Like, we've talked, I have a lot of friends and family that have come from the West Coast and from Utah. And in Salt Lake right now, the median price for a home there is about 585.
Yeah.
So we're almost half of that here in Jacksonville. So again, these are the kind of things you have to look at. So certain markets, yes, I think it is. Other ones where you look at that median value, what the average family income is and what a rent's at, that'll give you the answer whether it's, overvalued or not.
Yeah. And to kind of go back to some of the basics too. I mean, when if you're new joining us right now, you probably wonder what a turnkey property actually is. Well, that's the thing. Like Jim's company would actually supply, like give you a almost like a buffet table of here's properties you could be buying right now,
Yeah.
even based on rent predictions, everything else, because they help you buy the property, they help you finance it potentially, which we'll talk about here in a little bit, as well as help you find the renters. So you're not the one being the property manager; they're doing that kind of stuff, and that's kind of what you do. Is that correct?
That's exactly correct. And it came about, when 2008 happened, I had always just done my own properties or had partners. But when '08 happened and the bottom fell out so quickly, all of a sudden from, groups like how you and I met and different people you meet at masterminds and events started calling me and saying, man, the Florida deals look good. Could we hire you to, get some deals for us, find the right deals, get them renovated through your sources and get some management in place? And yeah, sure, we can do that. And that was kind of the birth of the turnkey market, finding, fixer-upper foreclosures, getting them fixed up, getting them tenant occupied, and then letting investors who were out of area step in to yield the reap the benefits for long term.
Yeah.
And that was a great model, Chris. But as you know, the older homes, they just have more issues. There is
Mhm.
just no ifs, ands, or buts about it. They just, it doesn't matter if you do new roof, new heating and cooling, new plumbing, kitchens,
Mhm.
bath, electric, everything. We call it the 3-year curse. And I own old homes, so don't. But I know that after by about year 3, I just am going to prepare that my repairs and maintenance are going to go up.
Right.
And that's what people have to be prepared for. And some people who are wanting real hands off and true turnkey, they don't want that. And that's one of the reasons why we went into new construction.
Gotcha. Now, it's no surprise, and we've even had people talk about it on the show from time to time. I mean, the turnkey space, the rentals in general, because the prices have been higher, plus higher interest rates, the cash flow is just not as sweet as it was, 2, 3 years ago. How have you guys been able to pivot and move and alter that? Because here's the thing that I hear all the time from some people to defend turnkeys. They'll say, "Well, it's the appreciation," and yeah, we get that, but you can't always bank on appreciation. That's a kind of a gamble, right? Like, how do you ensure you have cash flow and profit on your properties?
Yeah, it's a great question. And look, I love appreciation and but I don't depend on it. I do my best to get in its way, but I don't
Mhm.
depend on it. And a couple things I've learned over the years, Chris, is, first off, again, I talk about the 3-year curse. Those first few years are super important. Take out appreciation, just look at the asset as it is, where it's used for the housing of a family to pay you rent, and that's it. Where do we take away some of the risk for those first few years? Because those first few years, let's say it's stagnant, and then if the market does do something, well, then you can start to look at appreciation, but not right
Sure.
off the bat. What I found is,
If you've been following this podcast, you're probably looking for great ways to create passive income right now, right? Well, we got you covered here with Central Lending. Central Lending specializes in alternative investments that actually are designed to create steady returns and long-term financial security for you and your family. Now, they prioritize transparency. They love, building those strong relationships, giving you that confidence and peace of mind, knowing that you have your money working harder for you, so you don't have to work so hard for that money. You want to learn more how to do that? Go to centrallending.com and check out what they've got today to create your passive income and wealth creation right now.
you want to have a tenant stay the longest that you can. So when we were doing, we did a few thousand of the fixer-upper foreclosures. We were getting tenants to stay an average of about 13 months.
Hmm.
When we switched to new construction, our average tenancy now, Chris, is a little over 3 years.
Wow.
So right there, because what does that do? We're looking now at less turnover cost, less downtime, more steady cash flow coming into those, absolute pinnacle first few years.
Hmm.
So going from old fixer-uppers, which we will not absolutely not even do anymore. I have people, hey, will you find me some? And I say, no, I only do new construction now. Is we only do new construction. Now the second thing was financing, like you said. Well, cash flow was getting taken away not only because of price. In fact, I kind of have had both schools of thought. Yeah, price has gone up, but so have rents.
Yeah,
What's really the issue now is the interest rate problem. I
that's
mean,
right.
we've been at like a 27-year high. So what can we do? Well, Chris, when you and I first met, years back, I didn't even know this existed. I didn't even know this existed 2 years ago, what's called a builder forward commitment. When a builder is big enough and has a healthy enough balance sheet, and as you know, we had a partial merger with Sumitomo Forestry, so it put us in a really good position. We're able to now go into banks since we have no bank debt, a really healthy balance sheet, and we can pre-buy large tranches of money, mortgage money for our buyers and our investors.
Mm.
So, for example, you know, right now you get a duplex in Ocala, Florida with us, and you just went to your own bank, they're probably going to quote you about 7.25.
Yeah.
We'll get you in for that same one at 4.25.
Wow.
So it costs us money, obviously, but we're buying in large tranches, so we get a better price. And I can tell you this, if you were to do that at your own with your own bank, they won't even let you buy it down that much. It would
Hmm.
cost anywhere between 12 to 15% to
Right.
buy. And so we're doing that for you, getting people in, and that's solving the problem of getting the financing back at a really good rate, long term. This is long-term loans. And what happens then? Well, it goes from negative cash flow to positive cash flow. So I would say our biggest shift from, the last since '08 is going from old fixer-uppers going into new construction and then bringing our own in-house financing in. That's what's really helped our people continue to buy with us and continue to make the numbers make sense with us where it doesn't in a lot of other places.
No, it's significant. Well, I know there's been other companies I've talked to where they don't have, they might try to do that option, but usually it's buying down the rate or have the home, the seller try to buy down the rate for you if it's a used property or something like that. Or the builder, could be the builder too. But usually it's only maybe 0.5%, 1%, that you're going to buy that rate down, which isn't bad, but it's
Great
not
start.
3%.
It can't usually move the needle enough to go from, again, like you talked about, being stuck in a situation of negative cash flow to positive. And
Yeah.
that was our goal there, like you said, because, again, we want to get in the way of appreciation, but we don't want to depend on it,
Hmm.
especially too early on.
Right. Yeah, and I know another thing a lot of times people will do is they'll try to say, well, no property management fee the first year. Well, the only problem is it looks great the first year, but then you look at the second year and say, well, now I don't have any cash flow, right? Like now the cash flow is gone. So it looks good, but then it's gone, right? It's temporary if that's the only strategy you're trying to use.
Yeah, one thing that I would tell people when people come to me, Chris, whether it's friends or family or, what would you do differently,
Hmm.
is I would have done less of better quality.
Huh.
So buy
What do you
less
mean?
of better quality, meaning that I would have, people, oh, you've done over 1,000 rehabs. That sounds really cool, but going back, man, that was a lot of extra time and blood, sweat, and tears on deals that probably I shouldn't have done,
Mm,
and properties I shouldn't have held. And if I had just bought less properties of better quality, I would have had less headaches, better results, more free time. So that's what I always encourage people. Be very careful of. We all have to get in somewhere. So I understand getting in at affordable properties, but once you go into, really the most affordable, kind of the bottom of the availability in a market, you start to get into a risk of a lot more turnover, maintenance and repairs, harder to manage. So your goal of possibly providing a great home can really start to get turn sideways and you get put in a bad situation. So when I've had to
right.
look back, that was my big aha. Like my son just turned 21, he has his first home. He's like, I want to do deals like you did. I said, please don't. Do less of better quality. Enjoy yourself more. And that's what I try to tell all real estate investors, friends, family now. Like, I think that's the key.
Kind of like a friend of mine used to say, he's like, don't fill your ego, fill your bank account, right?
Yeah, yeah. It's like who is smarter, the guy who, you know, did 1,000 properties and made X, or the guy who did 400 properties and did X? I'd say the
Yeah.
guy who wasn't me. So, you know, so yeah, but it's, it's that balance. It's that balance of you don't have to worry about having 100 houses. You can have a small group of houses if they're high quality, lowly leveraged, in good areas, good condition. It can produce all the goals that you wanted without a ton of involvement.
Yeah, I love that. Well, before I ask you kind of our final question we always ask on the show, what's the best way if people want to see like what kind of properties and options you guys have? What's the best way they can reach out to you guys?
Yeah, if you go to jjplaybook.com, that's a great starting point. That's for our company, Southern Impression Homes. It's kind of our principles and track record with the build to rent, new construction turnkey model. You'll see, a free copy of our best-selling book from my wife and I. A lot of our clients' success stories are in there. That's a great starting point to see who we are, what we do, and also how does our property program work. You can find it all there.
Great. Well, be sure to put that in the show notes with jjplaybook.com. So,
Appreciate it.
well, last question for you. This is, the Money Ripples podcast, right? And I know I've talked about like the real name behind Money Ripples is that ripple effect you create in other people's lives. I know that's a big thing for you too. What do
Mhm.
you feel here on this planet to do? What do you feel is supposed to be your ripple effect?
I think my ripple effect was destined to try to bring family back into the forefront without guilt and without exception. You know,
Mm.
you know me personally, where I wanted to spend a lot of time with my family. I don't apologize for that. I know it's made me a better team member to all of my investors and people I went to, and that was important to me because I didn't want my parents were great, but they struggled with money,
Mhm.
and we didn't get a lot of time together, and I wanted to do that differently. So I think kind of bringing family back into priority and really getting a chance to enjoy it and take the adventures with them, that's my ripple effect.
That's a ripple effect that continues on and on and on for generations to come, doesn't it?
I hope so. I hope so.
Well, I love it, Jim. Well, I appreciate your time today. Really appreciate you, being willing to give and share, and being honest and authentic and upfront because, it's, in your business, especially where it has been kicked in the teeth a little bit. It's nice to see that you've adjusted and done some things to kind of make it work and evolve as a result of it.
Yep. I appreciate that, Chris, and it's great to see you again on all fronts.
Absolutely, man. Well, everybody definitely go check out Southern Impression Homes, check out their website, see if that's something that's going to fit for you. It could be a great option for you, of course. Definitely check that out. If you guys have any questions, of course, you can always reach out to us through moneyripples.com. But guys, remember, at the end of the day, it's not just about what you learn on this podcast, it's about what you do with that information. So go and make it a wonderful and prosperous week. We'll see you later.